All right. So this is a trade that I took on October 18. The date doesn't matter, but it's from this year. Okay. So this is what the analysis was looking like. Okay. So we had our big zone. So retest from this big key level right there. We've had the two moving averages from the 5 minutes, and this is a big 88-78 zone. So I was waiting for a structure on that. Okay, so price reached the zone, rejected it almost instantly, then build a structure. Okay, so what I mean by structure is it gets to a certain point where price doesn't want to go further down, right? So it's like some type of small consolidation on the small time frame. Okay, so you look at the candles, you see, all right, so the price doesn't want to go down there, either down there. So what do you do when you see that on your level? Well, it's pretty simple. Okay, after a couple of rejections just like this, you don't do anything else than buy. Okay, so you just press on the buy button when you want. So it could have been when we rejected that price, so on this candle, or it could have been on this candle, but the play was to enter a buy around here and put your stop loss right below there. Okay, so the trade I took looked something just like this. So when this candle closed with a massive wick, I bought just like this. My stop loss was below those wicks right there, so around 17 pips stop loss. Price then came a bit down, and then I'll let you see the rest. Okay, forward. So price went and gave some upside. I take profited around 27.19, so right there. And yeah, so that's the perfect textbook entry, which is the structural entry. Why? Get some liquidity right there. And then when you see some price on your zone, of course, if it's anywhere in the chart and it wasn't an highlighted zone, you don't buy that, or you don't sell something that looks like this. But when it's on your zone, this is where the structure is strong. So you could enter on these candles and just put your stop loss under the structure and target some bigger levels, which mine was around just right there. So that's the first entry point. This is the one you'll see the most often. Okay, this is the one that's happening, let's say around 60% of our trades will be from these types of entries. All right, next one, we've got the break and retest entry, which is a bit more aggressive than the structural entry, but when it's aggressive and it works, then your take profit more often goes quick too. So it's not like the structural entry when you have to wait like 30 minutes before entering. This one you wait about 2 to 3 candles on the 5 minutes. So I'd say around 10 minutes, you know if you've lost or you're in a good trade. Okay, so that was the analysis. All right, I had my major buy level on the fib 61 right there, with this huge key level that you can see that starts from there, with this. So I had the 71% zone highlighted. By the way, this trade was took on August 29th, so you can just go look on my Instagram. This was posted on my story, but you can also go on the Discord to this day, and this was a trade that I posted. Okay, so price reached that zone. Well, let's go with forward. price reach, okay? Price reach the zone, you don't enter right there, okay? We wait for some type of reaction. Now, we have our first reaction, so a first close which is a bit bullish. We don't enter yet. Next candle, now we've got our first reaction. Then if price continues to move up, then we've missed the trade, all right? There was nothing we could have done. I mean, maybe you could have gotten a super early entry right there, but this is super risky to do, okay? More time you will get fucked by trying to jump on a move that quick, so you wait. Then next candle, okay, this is where we will enter. Why? Well, we will enter if there's a retracement. We've had our retracement right there, so this is the entry point, okay? So look at this structure right there. You see that this candle gave us a good reaction, then a big impulsion up, then it leaves us with this zone, okay? So this little wick right there between two candles, which is a good break and retest structure. So when price came down to this wick, you enter the trade with your stop loss below right there. So you can see this one was a 34 pips stop loss. So as I said, we usually risk about 15 to 30 pips. For 4 pips, I'd say you can still take it, just reduce maybe your lot size. So you enter right there on the retest. You don't ask any more question. This is the retest that you were waiting for, and then you just wait, and then you can put your stop loss at break even, and then look at your profits grow, okay? And there you go. On this trade I got out at 25.20, so I think it was around there. Then we'll move on to the fake out entry. All right, so now for this entry point, it gets a little bit more tricky, okay? Not too much, but just a little bit, okay? So this is the fake out entry. The problem with the fake out entry is that sometimes, well, about 90% of the time, you'll try the structural entry first, then get stopped out, and then you will re-enter on a fake out move. Okay, so let's take this one for example. It's from September 10th. This one was on a fib 88. Okay, the fib 88 starts from way down there, so you would not be able to see it on the 5 minute. So this was the fib 88 line. I highlighted it just for you to see. When price reached the fib 88, okay, so gave us our first zone right there, so our first big reaction downside, then went and retested it right there. I took a short right here, okay, so I took a short on that one. So that's a mix of a break retest and a structural entry, okay. So we've broke the 88, retested it, so it's more like a break and retest entry, but it's a super valid entry, okay. So I entered right there, put my stop loss above here, so it was like a 10-11 pips stop loss, and then price moved down and we got stopped out afterwards, okay. When the candles that wiped us out right there closed below that structure that started from this wick, it's not more complicated than that. You can enter right there. So you don't ask more questions. You just got fucked on this trade, yes, but if price closes on the 5 minutes just like that, below and inside the structure that started right there, so it closes below that line, then shorts are still valid. So it's always some small risk, okay. So for this one, it was a pretty easy risk. I mean, 5 minutes close, you risk about 5 pips, and then your stop loss, your take profit can be the same as the first trade. Okay, so this is why I say this is a tricky trade to take, because most of the time, if you get stopped out right there, you'll be more tending to do relax, wait for the next trade. We don't like to overtrade, so I don't want to jump back in right away. But on the fake out entry like this, you have to just straight go back a couple of minutes later, because they are always super quick to react, and just like that, I mean, in 10 minutes you would have made about 47 pips, and I think that my take profit was around 90 pips, 80 pips, so around right there. And then I remember I took this buy, which will lead us to our next zone, which is the sniper entry. Okay, so these two trades were actually taken the same day. So what did we had? Well, we had a good old fib 88. Okay, so we took the short, made some profits. Then we had our buy zone that was right there. Okay, so this was our buy zone. So what are the criterias to take a sniper entry? Okay, first of all, it has to be on a fib 88. Okay, why? Because on a fib 88, it's super simple. You jump on a fib, you can jump on the 88 and put your stop loss on the 100%. That's it. So on the long run, at each good fib 88 like these, if you just snipe them, you will make money. Okay, more than 65-70% of the time they will work as a sniper entry. But personally, the second criteria that I like to have to take a sniper is that I have to be in profit that day or that week. Okay, so let's take that day for example. We've made about let's say 5-6K on the short. It doesn't matter that we risk about a grand on this trade, maybe even less. So it was a 16 pips stop loss, but we were risking some profits, so we don't care. Okay, this is not the trade that I would take, for example, on a Monday morning when this is my first trade of the week and I don't have any profits to lose. But if you have some profit to risk, then these are some pretty good trade to invest in. Okay, so super easy. The name says it all. So you just snipe it. So I entered just like that, sniped it, stop loss at the 100%, and then went and made about 150 pips. So you can go and back test this day, the September 10, 2024. That was a huge day for us. Everybody made some money in the Discord. But these are the 4 entry points.